Hey guys, welcome back. I hope you enjoyed the rest of your weekend and hopefully you saw the first video I posted. It was yesterday and that was the recap of last week's price action. If you missed it, it's in the pinned comment below. Definitely worth checking out, and then this video is going right into the trading ranges for tomorrow. So I'm gonna slide my intro in right here and then let's go check out tomorrow's levels. Alright guys, so before we get into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment. I do get back to every one of them. And this is difficult stuff, so if you're not understanding what I'm saying or why I'm saying it, then leave me a comment and I'll try and put it in another way. And there's no such thing as a dumb question. Alright, so starting in SPY, tomorrow's implied move is between 558 and 566, and that is from options. The 30-day average volatility is still quite a bit wider, 551 to 573, and on Tuesday's contract the implied move is between 557 and 567. And to the upside, the first level to look for is going to be the rest of this down gap. We gapped down right after making all-time highs back in July. So right after we made those all-time highs, we gapped down. And the day before we actually gapped up, and then we gapped down underneath that up gap. But last week we did fill that gap, and you could see as soon as we did fill it, we did see that big drop right here. So that gap goes right through the middle of the implied move to the upside right here. Bottom of that gap is 563 and a quarter. Top of that gap is 564 and a quarter, so about $1 wide gap right here, and that is blocking us right now from all-time highs, which are at 565.16. Then the top of the implied move is directly above that at 566, and the top of the implied move on Tuesday's contract is 567. And then something I've been doing recently, just because of the disconnect between the implied move and the 30-day average volatility, is finding the midpoint between 566 and 573. And I'm just going to do this visually here. It looks like it would be about 569. 569 or 570. So if you're not comfortable with these strikes, if these feel too close for you, but this one feels too far away, maybe 569 or 570 would be a better choice. It all depends on your comfort level and of course what you're trying to accomplish, whether you're selling premium or buying premium. And then to the downside, underneath us, we do have the 35 EMA. The 35 EMA is running right through the bottom of the implied move here. And let me just fix that. 35 EMA, and if I zoom out just a little bit, you could see how important the 35 EMA has been. So here was the weekly 35 EMA down here. That is where we bounced after that big drop. And once we got above the 30-minute 35 EMA, look at how cleanly that 35 EMA has been our support. And we did drop back underneath that right before Powell spoke in Jackson Hole, but we did get back above it, and we did close the week above the 35 EMA. So if we start moving downward, that 35 EMA definitely needs to be in your chart, and it's the first level to look for. And if we break that, then 558 is the bottom of the implied move. 557 is the bottom of the implied move on Tuesday's contract. And I just want to add something that I'm seeing here. And we do have an up gap. This is the Jackson Hole up gap right here. I will name it later, but just know that that's the up gap from right before Powell spoke, and that is underneath both tomorrow and Tuesday's implied move. So the bottom of that gap is at 555.98. So let's just say 556. And then let's take it over to SPX. The implied move over here is between 55.95 and 56.70. That is from options. The 30-day average volatility is much wider, 55.30 to 57.45. And Tuesday's contract is between 55.90 and 56.80. To the upside, the entire upper part of the implied move is this down gap off of all-time highs in July. So right here we made all-time highs, and then we dropped underneath, and then we gapped down the very next day. And then last week was the first time we got back into that gap. So it took from when we gapped down to when we got back into that gap 36 days. And we did leave a little bit of that gap open yesterday, or last week I should say, and that is directly above us. So the top of the implied move is 56.70. That is also lined up exactly with previous all-time highs. 56.69, 67 is where we made all-time highs in July. Top of the implied move for tomorrow is 56.70, so just 40 cents away. And then top of the implied move on Tuesday's contract, 56.80. So if you're feeling daring and you feel like the top of the implied move or previous all-time highs will be resistance, then 56.70, 56.80 spreads might be something you want to do. I'm honestly looking into that. And then the midpoint between implied move and 30-day average volatility, I'm just doing this visually. It looks like 57.05 would be a good strike. And then to the downside, we have the 35 EMA right here. And again, if I zoom out and show that 35 EMA, it has been our support ever since we bounced on the 35 EMA right here, and then we got back above the 35 EMA on the 30-minute time frame, and that was our support right here and throughout the entire rally back to near all-time highs. So 35 EMA, always an extremely important level. And then if we break that, 55.95 is the bottom of the implied move. 55.90 is the bottom of the implied move on Tuesday. And then I'm going to go ahead and add that level that I did miss in SPY as well. This right here is the up gap from right before or the morning of Powell speaking in Jackson Hole. So that is SPX. And actually, before we move forward, I'm going to add right here is a support that we can add, and that is at 55.58. And underneath all of that, outside of the entire trading range, we do have these moving averages within this up gap right here. So this up gap was from 2 weeks ago, the consumer credit gap. Then we have the 50-day moving average right here, the 1 hour 200 moving average still pointing down, and then the 30-minute 200 moving average, which is starting to point up. Now the 2 hour, 1 hour, and 30-minute are in reverse order, and it's very possible that that does pull us down, at least until we untangle these moving averages. So if we don't see down, then we may see a little bit of consolidation at these levels, just underneath the all-time highs. So moving on to QQQ, the implied move over here is between 475 and 486, and that is from options. 30-day average volatility much wider, 467 to 493, and then Tuesday's contract 474 to 487. And to the upside, the first level to look for is going to be just underneath the top of the implied move, and that is where we saw resistance last week. This was on Thursday. We did see that pop at open and that big drop back down to the 50-day moving average, and that was 484. And if I actually zoom out a little bit, 484 was resistance right here on one of the drops down. And we did see that as resistance all week, and we did close underneath that level on Friday. So then just above that at 486 is the top of the implied move. 487 is the top of the implied move on Tuesday's contract. And then if we're looking for the midpoint between 486 to 493, I'd say right about here. So 487 or 488, if you're not comfortable with these strikes right here, if they feel too close, especially if you're selling premium, because if you're buying premium, these probably look great. But if you're selling and you want to get just a little bit further out, then 487 or 488 might be a better option. And then to the downside, we do have the 35 EMA that is actually just right underneath where we closed. And then underneath that, if we break that bottom of the implied move, 475, that also has the 50-day moving average, this previous support, which was also a bounce on the 50-day moving average, and then this level right here, the green line at 474. I'm going to zoom out a little bit further, and we can see that 474 was right here, support. Then when we gapped under it and then dropped and popped back up, it was resistance. So this past week, we did get back above it. We dropped and we did see support there. So it is a clear pivot, support and resistance, turned back support for now. But 474 has been getting some action. So just be aware of that level. It is actually just underneath tomorrow's implied move, but it lines up perfectly with the implied move on Tuesday's contract. So underneath all of that, we also have this consumer spending gap right here. 1 hour 200 moving average is still pointing downwards. That is a big deal, and it really could pull us down until we get some of this straightened out. We need to turn that moving average, and we also need to get the 30-minute time frame above the 1 hour and above the 2 hour, which is up here. And FYI, the 50-day moving average and the 2 hour 200 moving average are the same level. And I took that to the 1 hour. Let's go back to the 30-minute and just check, make sure there's not anything else before we move forward. And let me zoom out just a little bit. Okay, looks good. That was QQQ. Taking it over to IWM. The implied move over here is between 217 and 224. And that is from options. Remember, on Friday we had the biggest move right here. So 217 to 224 implied move, 30-day average volatility much wider, 213 to 227. And then the implied move on Tuesday's contract, 216 to 224. And to the upside, the first level to look for is going to be where we had Friday's highs, and that is at 221 right here. And then I'm going to zoom out because I don't think, we don't have any other resistance to the upside in IWM. So if we do start moving up and seeing some upward momentum, then the top of the implied move is at 224. The top of the implied move on Tuesday's contract is also 224. And if you look off to the side, I usually round up, and you could see that this 224, you know what, it's only a few pennies above. I'm going to drop it to 223. So 223 is the top of the implied move for tomorrow, and then 224 on Tuesday's contract. That does make a little bit more sense. And then if those two feel too close for you and you're selling spreads and we do move up and you want something else to look for, maybe 225, just don't forget that it is possible that we make it all the way up to the top of the 30-day average volatility. We did on Friday. So make sure you choose a strike that you're comfortable with, but also maybe check out your secondary indicator. And once you start seeing weakness, then pick one that is most reasonable for whatever your strategy is. And then above the trading range for the next 2 days, we do have the next resistance is right here. So disregard the gap right here. We did fill that gap. That was the bear gap that actually went back to 2021, and we filled that gap, and as soon as we did, we saw that massive drop. And that was actually pretty impressive a few weeks ago, just how perfectly that acted as resistance. So 228.63 is the top of the gap that we filled, and that was to the penny our resistance a few weeks ago. So 228.63, I'm going to round that up to 229. And then to the downside, we do have the 35 EMA right here, and it's underneath the bottom of the implied move. If you've been watching for a while, when the 35 EMA is outside of the implied move, we tend to have a down day or a flat day. That doesn't happen all the time. In fact, there have been a few times in the past 2 weeks that we have completely defied that and kept squeezing higher. But now that that is mostly behind us, this has a very high probability of pulling us down at least to the 35 EMA, or we trade flat and wait for that 35 EMA to get back into our implied move. And if we do break that 35 EMA, bottom of the implied move is at 217, and then bottom of the implied move on Tuesday's contract is 216, and then underneath that, at the very bottom of our 30-day average volatility, we do have the 1 hour 200 moving average going right across the bottom. And last week, and then the Friday before, we did see that 1 hour 200 moving average as a resistance. And then on last Friday, we actually gapped above that and pushed up when Jerome Powell spoke. So that is IWM. And then last but not least, let's take it over to DIA. And DIA, we do have a little bit of a different chart here because we don't have daily options contracts over here, so we only have the weekly contract, and the implied move for the week is between 406 and 418, and that is from options, and that is on the Friday contract. So 418, and then funny enough, the 30-day average volatility is the exact same, so 406 to 418. Let's see how that plays out. We do have this dashed line right here, and that lines up with previous resistance. And actually taking it one step back, we did close right at resistance right here. So this was from July 31st, right before we saw that big drop. We hit that resistance, and this was actually the same time that IWM closed its bear gap. So we closed right there at the 411 level. So if we do get above that, if that's not resistance right away tomorrow, then above that we have our next resistance, and that goes to July 18th, and that is at 414. And then to the downside, we do have the 35 EMA, and I'm going to zoom out. You could see the 35 EMA has defined the entire rally except for the one day right before Jerome Powell spoke. And then the next day we gapped right back above it and saw that level as support. If we break the 35 EMA, we do have the bottom of the implied move and the bottom of the 35 and the bottom of the 30-day average volatility, which is our trading range for tomorrow, at 406. And that also lines up right here with where we saw support last Thursday. Underneath all of that, we do have a decent amount of support. We have an island gap right here. I honestly don't know if it's an island top or bottom because we had so many gaps right in this level. So right above 400 to about 403, we've seen price return to that level multiple times lately. You could see right here we had an up gap, then a down gap, and then another up gap here. So this down gap and this up gap right here are overlapping. This definitely could be a battle zone. And I've been mentioning lately, we do have the 1 hour 200 moving average, the 30-minute 200 moving average, and the 50-day moving average. They're all down here, and they've been very slow to turn. The momentum there is almost flat. It is up, but it's not up a whole lot. So price may return back there to test that level, and to move higher from here, We really need to get those moving averages facing up a little bit higher. They are a measure of momentum, so we need to get that momentum up, and currently it is pretty flat. And looking underneath that too, look at this 4-hour 200 moving average, almost completely flat. So that may be just something to look for. So there you have it, guys. Futures right now are down about 0.1%. Let's see how we start the week. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.